Live, there's no taking it back. And if you are here for the crash, welcome, ladies and gentlemen, because as of right now, as of the overnight, the open, we are down another 5% in the overall market. Let me shut this guy up. Hold up. Hold up. Let me mute you, Dave. 5%, people. Already another 5%. We were talking about this in the Discord. We talked about how we are in these oversold conditions. We talked about the bounce, but we also always like to look at both sides of this, and we've seen there is a possibility of a gap down. And then we started looking at the past, the present, the future, baby. And so I want to go over all of that with you tonight. I just want to say, hey, what's going on? Good to see you, B. Stewie, Jimmy Bright, Yosef, and Norman Conklin in the building. Thank you guys for being prompt and early for the live show. If you're watching this at a later time, that's A-okay. Make sure you hit that like and hit that subscribe button. We do this weekly, baby. And of course, we do some form of studying on Wednesdays. So make sure you hit that like and subscribe. I think it's time, baby. I say we get the party started. All right, guys, we got a lot to go over, and I'm really pumped to do this. I was studying the market. I dove deep. I love reading about the crashes and hearing about the sentiment. I used a lot of ChatGPT, the voice interactive, to kind of read back to me, hey, what were the causes of this, or what was the sentiment like leading up to the crash of XYZ? So you insert the crash, and I was looking it up. And one of the things that I came by actually when I was looking through Twitter is this gentleman right here. And, I love giving credit where it's due. I always do and always will. And I came across this post. So I started looking at the 1987 gap when Black Monday happened. Now, I'm not saying we are having another Black Monday, but this is what we are covering right now because, look, we already have got this gap down, and we could have a very monumentous pullback. And so when I seen this, I started doing a little bit of digging because you don't want to just look at any random post. You want to make sure you do the digging yourself. That's exactly what we did. So I started to look at the 1987 gap down, and I found a lot of very, very interesting things. So right here it is. Right here is that gap down right here. And if we measure the gap down from the peak's high to its low, it's over 40%. It's over 40%, okay? When we look at where we are at right now in the overall market, you will find that we are roughly, with the current gap down, we are only at 25%. So I don't want to point out or say that we're going to have a further gap or anything. We don't know what's going to happen. Personally, with the oversold conditions that we are in, I'm expecting a bounce from somewhere here. But I am never overly certain that we cannot go further down. So what do? We sit back, we relax, and if you're taking day trades like I have been, just keep in mind risk management. It is pinnacle to the survival of this trading opportunity. But I am Dave Worrell Trading, and I love and I wait for the right opportunities to find those swing trading opportunities that make us those monies. We wait for the trend and the base breakouts in a bull market. Right now we are in a bear market, so it's a sit on your hands, wait for the opportunities type of market. And if you have to get your fingers in the mix, it's more of a day trading, this a monumentous volatility. So I hope you are all in the right ends of the trade here, because this pullback, this NASDAQ pullback, had the same implementations that we had today. They were worried about rising interest rates. And after Jerome Powell speak, which we'll get into that, is a very, very important significant thing that he said that I'm going to go over very, very soon. But Guys, we could very well pull back much, much further, but you know I'm a man of positivity because there is enough negativity in the market. And if we look at these type of oversold conditions right down here, take a look at these oversold conditions. This is the highest oversold conditions that you usually see in the NASDAQ. And right now we are at a time where we are very, very close to those same oversold conditions. So if we do get a bounce, is that the bottom? That's the question I have. Is this the bottom? If we get a bounce, will that be the bottom? Or are we just going to pop up again and slide back down just like the 2021 pullback after the printer finally turned off, you know? I'm sorry, 2022, 2021, but end of 2022, that huge pullback that we had, the bear market of 2022. So are we going to have another one of those? So I put it up in the poll. That's the question. Do we have more pain to come? 43% of you so far have said, yes, we have more pain to come. 29% said we have found a bottom. 14%, what the F is going on? 14% say everything is fine. Everything is okay. What is going on? Zamora is in the building. Good to see you. Dan Bob says, Norman, did you bring the party? I seen you flirting with the new one. Oh gosh, I probably shouldn't say that. All right, anyway, guys, we have gap down as of right now, another 5%. Well, at one point, but at this point where we closed out from Friday, we are down 4.75%. That's pretty scary, guys. That's pretty scary. That's why we always talk about that 21-day moving average. When we break the 21, we have lost the momentum, and that's exactly what we called out up here. It's a beautiful day to be risk off. It really is. We need to stay vigilant. We need to stay focused here. So we have a lot to go over. And one thing, we have a small change on the old CME Fed tool. So let's take a little peeky gander at what our handsome Mr. Powell has to say. Interest rates with Jerome Powell.
Oh, yeah.
All right, old Papa Powell came out and he started spitting some game into the mic. And as you guys know just as well as I do, when he starts to talk, sometimes there is some fluctuation in the overall market. Well, with Trump and with Powell and with the updated economic data that has came in, we have a bit of a change. You can see May 25th, you can see here, we have an increased probability of a rate cut. But, and once we go over this, we need to go over what was said by old Papa Powell himself that I want to tell you what I thought was a game changer, and you could see a sentiment change in the overall market's direction. Right here, June now is looking like we're looking and leaning more towards a rate cut rather than July. You can see here, when we were looking at this before, July seemed the most probable time that we were going to actually cut a 1/4 percentage point, but now it's in June. So it looks like that probability actually went up higher. Very interesting. Now, when we look in July, you can see we actually have a higher probability to get that second 1/4 rate cut. So we're looking at 2 almost immediately now, rather than waiting till December to have all 3. It looks like July, we have a 50% probability to be down 2/4 basis points or 50 basis points in the interest rates. So if I skip towards the December though, then we start looking at this and you can see it looks like we have an increased probability of actually being 4 cuts by the end of the year, which is very, very interesting to me and tells me, it screams off the bullish alarms because they're going to have to pull back. That's exactly what the president wants, you know, yada, yada, yada. You know, you guys have read the headlines like he's trying to crash the market, whatever. I don't get into that. I'm going to focus on the price action and what the overall sentiment is. And right now, it's still telling me that we have now it's telling me that we have an increased probability of a 4th rate cut. So, increased probability, okay? Increased probability. This could continue to go higher if the overall sentiment in the market is not looking good. Now, one thing I do want to point out though, guys, what I found really, really important when I was listening to the old Papa Powell speech is that he is saying, you know, the overall market is afraid of the uncertainty. And they do not know what these tariffs are going to bring and what is going to be finalized and settled. Of course, the other countries were talking, coming into conclusion and negotiating, whatever actually is happening there, whatever is set and done and in stone, and then those actually take place, which is going to take a while to figure out. That is when monetary policy, the Fed, will have to then step in, and they will have to analyze what now what now is going on and where there might be the cause and the effect. But they cannot act right now, and they don't have any certainty because they do not know what is going to happen, and they actually said that. Now, of course, Jerome Powell always seems like a rock when he is talking, but it was very interesting, and it really keened my ear when he said, "We don't know what's going to happen. We don't know the implications of the tariffs." And if you have the overall populace worried and uncertain, and the Fed also saying there is uncertainty, you're going to get a double whammy, if you will, and then we start to head even lower. So that's why, and when we look at something like this, we have to understand that there is a probability that we could head even lower than this by looking at the past. Now, this past here, of course, guys, the past here, when you look at something like this, you always need to know, like, yes, we don't always have to, do exactly what our past has done, but we need to understand that we could. There's always that probability. We always want to know that. What's going on? Jacob, what's going on, dude? Much love, Dave. Thank you. Norman, what's going on, brother? Erica K, it's good to see you, Erica. I hope everybody's doing well out there. So just keep that in mind, guys. There's always this probability, and it really could happen. We could wake up, there could be margin call galore, and this just Tankerson's heads on even lower, okay? Just want to point all that out. Very, very important. Now, looking at the overall ETFs and the SPYs and the social sentiment, one of the first things that we like to look at is if we go to the full sector, we can look at what happened right here on the initial pullback, and you can see not just 1, 2, or a quarter or half of the sectors, everything got hit. Literally everything got hit. There was no safety. There was no safety in utilities. There was no safety in healthcare. Financials, hell no. And energy, what you think would fly mostly to that, and consumer staples both took a hit. So there was no safety on Friday. Definitely no safety, and it took an even harder hit in the after hours, so this isn't really showing you the real hit that it took. If we look at the overall 5-day or 1 month, you guys will find out that this new, this new tariff thing is not good for the overall market. And, there's different political agendas that you could go in and think about and talk about. You could rant and rave, and you can be angry about what's going on, or you can sit back, relax, wait for the opportunities, because I am getting excited. I don't know if you guys can hear it in my voice or not, but I am getting excited. And there's so many bullish probabilities. We can look at the overall S&P 500, and I know a lot of people in our Discord, they like using this point of control, this POC. And if you pull this and you use this trading view, which, by the way, if you need a charting platform, you can click my link in the description down below. Download TradingView. Use my link. It helps me out. But here is your point of control. This right here tells us and shows us where the highest areas of support are. Right now, with this gap down in the overall S&P 500, your next highest area of support is that 475. We want to see the market hold here. Of course, we want to see the market hold anywhere, especially if you have a long-term vehicle like a investment, a vehicle in the market where you want the overall market to head higher. We just gave back a year of trading, folks. All of 2024 has been washed away. And if you didn't have buy and sell rules, well, then hopefully you're long-term investing, because to be quite honest, this is one of the biggest hits I've ever witnessed. And I'm sure if you're a newer trader, you as well. You got to have at least 20 years in this business probably to see something that happened this dramatic, So very, very interesting to see. And I'm glad we got to cover this together. But this point of control, the highest area is all the way down here by this 440. Now, if I had to take a swig at where we are going to find some areas of resistance. I would say this 475 is a huge probability. I think we could probably bounce off of here. The question is there going to be enough liquidity to back that up and keep it heading higher and enough people there to support this area? So it's, you know, it's all painstaking to see. You know, I know a couple of guys who actually just talked to me about they're getting ready to retire, you know, and it's just like they just washed away a whole year's worth of compounding. So it kind of stinks, but you know, it is what it is. We just got to keep on keeping on. When we get pulled back here as swing traders, we're looking for the strength in the market. And right now, there is no strength in the market, so we're waiting for it to shape up. We want to see the rally day, and we want to see the follow-through day. And if you guys don't know what those are yet, just go ahead and watch. It's in some of my training videos. And B. Stewie, thanks for posting that link there. Yeah, all the world's indices also fell. Absolutely, Joseph. Yeah, because of the uncertainty. Nobody knows what the hell's going to go on with their countries and the implications that tariff hold on their country. You know, and I don't think anybody understands how all this is going to work out, and we'll see. Hopefully, it's in the best favor for our accounts and in you know, in the world in general. I guess. I guess it's the best thing we can do is have hope that it's going to work out in the best for the majority, right? All right. So with that being said, let's go over some social sentiment, guys. This is something that Joseph brought up, and I see some other people using it. I like to take a look at it just to kind of see where we're at. Now, this was done on 4/2. This wasn't after the president's speech, but you can see we have been negative, and in the beginning of this month, we were very, very negative, okay? So you can see here, we are well leaning over here to 61.9% is bearish right now. We have very, very few bulls out there, and that social sentiment seems to show true. But hopefully, and here's the thing, I don't know about you, but I don't have any normies out there talking to me about the crash, the recession, the what's going on. The only people that really are aware of this right now in my circle, it is you guys, you know, is you guys. There's nobody else around me. My grandma, my friends, they aren't like, oh my gosh, did you see the market? Oh, did you hear that the market's crashing? You know, usually by the time they tell you that, it's already starting to surface. It's already starting to do better, you know. At least the last two major pullbacks we had, that's how it was for me. So here's the social sentiment. Right now, most likely the bearish sentiment we've seen in a very, very long time, as the norms is 31% in the historical averages. So when you see 61.9%, that's pretty serious. That's some pretty serious stuff. And some of the things that we got to watch out for, because right now we are data driven in this market. I feel like any kind of data comes in here, if it's at all skewed from the forecast, I think you're going to see a lot more liquidity starting to come into this market. Right now, we have that core CPI coming out. We start to see inflation start to get rampant here. That's not going to be a good sign for the overall market long term. Short term, you might see implications of interest rates being raised. So that would actually have further implications to the downside in the overall market if it can come down any further, but I hate saying that. CPI year over year, month over month, and then of course initial jobless claims. This is all happening on Thursday, April 10th. Thursday, April 10th, day before my son's birthday. And we need to just pay attention, because when this happens, this is all going to happen at 8:30 in the morning. So make sure you are keeping an eye on the overall market, that you give yourself that room in your risk management to know that in the pre-market, you're going to see a lot of liquidity at 8:30. You're going to see it happen quick. Okay, the algo trading is going to turn on, and it's going to happen very, very quick. So keep that in mind. And of course, guys, we are coming into, I got a few more things that I want to bring up, but then of course, if you want me to take a look at any stocks, anything out there whatsoever, let me know. We're going to go over a few stocks here, and a few other things, but just go ahead and throw it in the chat. I'll go back over, everything in the chat. If you guys have a ticker that you want me to take a peeky gander at, we will definitely get back and go over it. And make sure you vote too on the poll. You got 12 watching. I want to see 12 likes. I want to see 12 votes. Do me a favor and do the damn thing. And I want to give a special shout out to Norman Conklin as a member. Thank you so much, Norman, for supporting me, for supporting my family, and supporting for this awesome community and this channel. So thank you so much for being a member. And Dan said, Dan Bob said, I had a very non-trading normie ask me about the market yesterday. Very interesting. I would like to know more. What was he asking? What was he inquiring about? You know, is he inquiring about it heading lower? Was he inquiring about if it was a good time to buy in? What was he saying? And, you know, a few other things, guys. I was telling you about how I was kind of going back and I was looking at different crashes. One of the things, too, is, and if you haven't already, is Mike Webster. I don't know if you guys remember, but I talked about the volume kind of being dirty or yucky. This is where I got it from, actually. I didn't realize that I got it from Mike, but Mike Webster, one of the IBD guys, awesome guy, spent a lot of time with William O'Neill himself, the How to Make Money in Stocks, the Orange Bible. And he does a lot of these studies, and he does a lot of rants, and he talks, but and every time he goes on these like little spiels or rants, it's just gem after gem. So do me a favor, give Mike Webster a follow here. I will put this in the chat, but he did his own studies right here, had a different topic in mind, but after we crashed this week, I wanted to focus on the past stock market crashes like 1929, and look at that, 1987. I was looking at this, and when this pulled up, I was like, oh my gosh, I felt so good that I had already did my studies. I already looked at all myself. I already deployed my thoughts in the Discord, and then he comes out with this. So after I did all my thoughts and study, I got to watch the Webby himself do his studies as well, and he did an even deeper dive. So you guys should check that out. It's great. It's great material. Absolutely love this guy. So make sure you give old Webster a follow, and let me put that in the chat so you guys know. Oops, hang on, let me put it in this one here so you guys can just click on it. There you go. And then, of course, I already brought this up once, but this is where I first got that 87 thought, was this, and then I wanted to do my research, you know. What percentage was the fail, and you know, what did it look like? And of course, it being 87, it's very close and near and dear to me, because I always like to say I was born in a bear market. I was born in 88 though, but this is good enough for me. I like to say it. So I was born in a bear market, okay? But go check out this guy too, Yuri Matzo. I like posts like this. They make you think, they make you want to look more and deeper into it. And of course, if you guys don't know already, I've been doing this for a long time now, and one of the earliest follows I had when I decided to start up a YouTube to document my whole journey was the old beefiest of stews, and I'm just so proud of this dude because his technical analysis is absolutely phenomenal. So let's take a look at what the old beef stews got to show us.
Oh, I see you over there. You got problems? We've got the beef.
All right, this is the beefiest of stews. Oh yeah. The old beefy stew here has brought up quite a few cool things that I wanted to look into. Now, we're going to see some sentiment change right here with this one, because I don't know if you guys seen, Bitcoin had a bit of a pullback, but MSTR, you can see, is creating this great wedge formation. Of course, you don't want to look at the fundamentals. The fundamentals only look at the technical analysis on this one, but you guys can see here, MSTR, a fan favorite. If it can hold the storm overnight, MSTR might be able to pop here. If not, we might actually see a stage 4 forming as it keels right back over. So keep in mind, this reminds me a lot of Abercrombie and Fitch. If you guys remember, this just 3 months ago, 4 months ago, we were watching Abercrombie and Fitch make this huge, high, tight, we'll call it a flagging pattern over a 6-month base, and then it broke lower after a fake breakout, if you guys remember right. So I see this, I see ANF, so be careful, because this thing could break out. Sure, it could break out, but with the overall current sentiment right now, when we see something like this, it could break back down. But That's not what he is implying. He's doing this just to show the charting. He's showing the anchored VWAP here. And it's such a beautiful thing because it's right there tucked underneath that anchored VWAP. So if it was able to, this might be a great area for a respectable risk to reward area for a long. So I love the charting. Right here's your point of control. It looks really, really good. So Dan Bob said, great video. Oh yeah, the Webster video. I'm glad that you watched that, brother. It's very insightful. And you know, it's right in line with what we do. You know, we're swing traders, we're momentum traders. So he absolutely understands where we're at right now. And he's doing exactly what we have said you need to do for the longest time. When you break below the 21-day moving average and then you start really flooding and now below the 200 for days, there's only one thing to do. That's sit back, relax, and study. Absolutely study. And speaking of studying, Beef Stew is on, I don't even know how many books, but he's outread me, hands down. Got to give it to the man. He has a vat of knowledge with the amount of books he's read. I want to see your collection because he buys all the hardbacks. You need to take a picture. You need to post that in the Discord, my man. AGI. So I'm glad we brought this up. This was a play that we brought up as a basing breakout. And you can see right here, here's a cup with handle and then a base on top of a base. We talked about AGI back here at this base, and you can see it's doing well. Just like DRD we called out as well, that's still doing well. And you can see right here, this is an undercut and rally back into this area. And actually, Richard Moglen did a live show, I believe it was on Friday, if I remember properly, that was about these undercut and rallies and how very strong that these are. Now, this is a slower mover at 3.26%, but it's definitely one to keep an eye on as AGI has been a flight to safety. Now, of course, everything took a big hit on Friday, but this is definitely one to keep on your watch list because if you like gold, AGI is the stock to watch. And I love these pictures. Look at this. I love it. And it's cool too because they're all in suits. You know what I mean? And a couple of them are hard hats. Just digging away. They'll make it. Dan Bob says, I got to chat with Webby today on X. Had a couple of back and forth. Well, that's awesome, man. Yeah, he responded to a few of my messages today. Just on some of his posts. It's just really nice. It's so amazing that, you know, some of the guys that we're learning from, some of the people that have been so close to some of the greatest people, we can talk to, we can chat with, we can come in contact with, and it's just an amazing thing that that you can come so close to some of the people that are doing so well in this. And I found the same thing with jiu-jitsu too. If you really want to be with a world champion, I had breakfast with one of the best jiu-jitsu practitioners ever to live. And I got to go have breakfast with him right here in Monroe because he came down here to do a seminar for us. Like, mind absolutely blown, right? I've got to roll with world champions when it came to jiu-jitsu. And because we're in a tight niche, right? 99% of people fail, right? Most of you have still been with me for a very long time. We're still here. We're still studying. Risk management's going to keep us surviving. And when we get close to these people and you follow the greats, there's no way you can fail. All right? All right, let's keep on keeping on. When we're looking at these guys, do keep in mind, these aren't buy or sell recommendations in any way. I know you guys have heard that before, but B. Stewie just loves to chart these. Some of these have very low volume. Like this average volume is adequate, 11.52 million, that's adequate. But some of them do have lower volume and things like that. That's just for the charting. It's just to show the different dimensions, the high tight flags, the basing, breakouts, you know, anything like that. When it comes to the volume, you need to look into that yourself. You need to understand and do your due diligence on the background of the stock. And it's only going to help you get better, guys. It's only going to help you get better. Definitely. But this one here is VVPR, of course, Vivo Power Internationals PLC. See a lot of volume coming in here. It's pulled back and held the majority of its gains with a relative strength index of 99%. You can see this thing look like it's getting ready to absolutely explode. Of course, in a market like this, it's less likely to, but it definitely looks very good. So I like VVPR for sure. Look at this guy. Dang. TAL, TAL education. You know, I seen this. I didn't, yeah, this is looking really, really good. And you got the anchored VWAP off the top. It's tucked away nice and tight. Yeah, this is looking really good, but it is a China stock, so you got to be careful. It already has inherent risk, just like a biotech, pharmaceutical. Got to be careful with those. All right. All right. You guys have any stocks that you want me to take a peeky gander at? Because, you know, I'm telling you, here's the thing. I could go through, I could show you what I have, but it's going to be the old leaders. Like, remember Root? My precious Root? Oh, I made some good money off of it. I had a great call out on Root. That was great, right? But I bet if we take a look at Root now, things are going to look a little different. If it'll let me. Is it going to let me? Uh-oh. Hope I don't lose you guys. Oh, here's Root. All right, so actually it looks like Root's holding up A-okay. What is going on with my... Hold tight, guys. Sorry about this. There we go. Can I bring it up now? Come on. Come on, baby. Lucky Roo. There we go. I think I got it now. Nope, nope. Oh. Let's try it one more time. Come on. Oh, of course not. All right, I'm going to restart this really quick. Give me 1 second. But if we look at our old leaders, guys, you're just going to see there's a lot of fails, The same things are doing well, and that's going to be your gold stocks. They're still getting a pullback. There's a lot, you know. Now, if we look at this old leader like Root, this was a flight to safety. And you can see here, Root has had a humongous pullback. That's why you have buy and sell rules. You can see we got in here, it broke out higher. We exited the majority of our shares out, brought our stop loss up to break even, and then we stopped out in the last 2/3. So making some money, not making the biggest amount, but we at least shaved a little bit off and gave it room to work. So it worked out great. What I'm doing right now in the overall market is just playing SQs. Now, I basically gave the incentive of why I was going to do this. The risk reward to me was right there. You can see right here, this line that I drew off of this. You can see it popped up. It was on much lower volume, so I just expected it to pull back. And I wanted to not only hedge my account, wanted to make a little money off of it, so I just took a little bit more in the SQs, but the risk reward was there for me. So I held on to a little bit, got out of the majority of it, added more back into it after that speech, after the sentiment was to the downside, after we cleared that resistance area, and then we pulled back very hard. I got more short in, added it all back, and here we are. Of course, in the morning, we are going to be gapping down even further. So I'm going to exit the majority of that trade. I'm going to call that good. It should be up around 30% on that trade currently for the SQs. If the gap is true, if we do gap down, or if we do open with a gap down at 5%, I'll be up another 10% on this, which will be close to 30%. So I'm going to have to shave off some more there. I took some off at 16, some at 18. So I'm more than willing to cut some more at the open, and I am expecting a bounce. I want to see a bounce. The oversold conditions right now in this are just absolutely deafening. Look at this. If we zoom in on this on the daily time frame, look at this. You don't see this very often, guys. See this reddening area here? That same reddening, that hasn't happened for a very, very long time. Usually, you'll start to see that oversold condition, and then you'll see it bounce. You can see it happens over and over and over again. This oversold condition is very less likely to happen. You can see all the way back here, August 2015 was one of the last times that's really popping up here. I mean, it's just nuts. It's nuts to me to see, even COVID held up better on that pullback. This is just a monumental pullback, guys. We're going to be talking about this for quite some time, so get used to it. All right. And we could run through, guys. We could run through the ETF and SPY review, but I'm telling you, the best thing for us to do is to sit back, relax, and Just wait. That's what you need to do. I know it sounds boring. It's not flashy. It's not flashy, and I promise you, the more boring your trading is, the better off you're going to be. I'm telling you, I didn't really start making really good money until I got away from the markets and started swing trading and got away from day trading. Day trading, I was giving so much of my money back. Swing trading is where it's at. That's where the big money. The day trading, you're going to make some. You're going to make some. And in volatile times like this, it's easier to day trade. But once you have sustainability, you find that rally day, that follow-through day, you find the leaders in this overall market. We're going to find the next NVIDIA. We're going to find the next PLTR. We're going to find the next Meta. We're going to find those folks, I promise you. We've found them many, many times before. If you've been with me over the years, we have found a lot of leaders. We've missed a couple too, but we have found and we've played the majority of the leaders. They have at least been on our leader list. And we're going to have another beautiful, beautiful leaders list for you very, very soon. So make sure if you want to be a part of this, everything we offer is absolutely free. Just make sure you do not answer any private messages. There's a lot of scammers out there trying to act like myself and B. Stewie and Dan Bob. So make sure that you don't answer any private messages. But we have our Discord, we have our Facebook groups. Click on the link tree down below. And of course, if you want this awesome trading platform, it helps me out. Click the link down below in the description for TradingView. Download that. Get the essential plan. That's really all you need. And kick ass and take names, folks. Do we have any tickers? B. Stewie says, great time to study. You're absolutely right. B. Stewie, it's always a good time for you to study, bro. You're constant, like, I'm thoroughly impressed. I truly am. You know, usually you read the majority of the books, you have your favorites and you go back to them, but you have not stopped. You are chugging along, reading every damn book in your way, and I'm telling you, I am very impressed, so hell yeah. And thanks for posting my link tree. It's in the chat. Erica Kesea, I tried to trade inverse ETF last week. Very difficult for me because I was watching it with regular ETF on separate screens. Yeah, I could totally understand how that can get confusing. Absolutely. What I like about using inverse ETFs is if you're looking like SQs, you can look at the SQs subjectively. Then you can go over here and look at TQs subjectively. And then you can look on both of those areas like, oh, well, look, this looks like this has an area of resistance right here. So this looks like most likely area to bounce. And then you could go back to SQs and you could go, oh, okay, well, it popped up here. Where's the resistance? Oh, it looks like here is probably most likely resistance. Okay, we broke through that. Then you could go to the Qs and you can actually look at it subjectively with this big shit emoji right here. Yeah, easy, subjectively, right? And you can look right here, if we look at this, it does look like our biggest area of support is gonna be right where we are at right now, but we all know we've already gapped down below this. So our next area of support, 380, holy guacamole, watch out below, be careful out there. Hide your kids, hide your wife, because everything's fading out there, everything's fading. We gotta be careful, guys. This is a big pullback. It is starting to suck up a little bit, that's nice to see. But from the close to where we're at right now is still a gap down of 3.38%. So, you know, it might pop back up. It might be covering. It might head right back down. I have no idea. I'm waiting for the rally day. I'm waiting for a change in the overall sentiment. I'm not going to try and call the bottom. But if we can get a bounce, I promise, bye-bye SQs, hello TQs. I'll play the volatility in whatever direction I can. But until then, I'm going to sit back, relax, and wait for the overall market to show me where it sits. If we get those new higher lows and I can get attached to a beautiful bull market, I want you to be there with me. So help me find those leaders, folks, because I need more than just my eyes out there. And we'll catch you guys next Sunday. And if you want to be a part of our read-along where we continue to study the Orange Bible, you can be a part of that too. Join the Discord. We'll be in there on Wednesday, or wait on YouTube for the read-along. We're going to hit every portion of the Orange Bible, and eventually we will hit it all. And then we can put it all together. We'll see you guys very, very soon. Thank you guys so much. And if you want to wait till the very, very end, I'll give you your shout out that you deserve. Take care, guys. Much love. Peace. Mic check. Okay, there we go. We can hear it. Yosef, thank you guys so much. Thank you, thank you, thank you. No, honestly, I want to give a heart-filled, warm thank you. If you guys are still listening right now, you are the real ones. I love to do this. I'm going to continue to do this, and I'm not going to stop because I might be 10 years down the road, guys, and I have all of my journey documented. Eventually, I plan on making millions, and I plan on giving back. And I love that the majority of you from the beginning are still by my side today. We've had some awesome times, and we're going to continue to have some awesome times. So if you're still here while the market is on fire, it's because you truly want to be a trader. Thank you so much for being a part of this squad. And thank you, Zamora. Thank you, Norman Conklin, for being a member. B. Stewie. Thank you so much, Nadayo. Thank you. No, you are great, sir. No, you, Jimmy Bright. As always, from start till finish, the boy is prompt. You got to give the man some credit. Erica K., thank you so much for doing cartwheels and keeping that Netflix trade up in the sky for so damn long. Dan Bob, for your continuous amazing help from each step of the way. I do appreciate every single bit of it. Thank you, sir. And I think that is everybody. Let me zoom up. Let me move up. Let me see what we got. That is everybody. And we're going to go ahead and end this poll right now, as 44% of you think that we have more pain to come. The majority usually rules. Thank you guys so much. I hope you have an awesome night and an awesome week. Love you. Bye.